Good morning. It's the penultimate trading day of the week. You're watching Trading Hour. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Hormuz Fatakia. With me as always is Reema Tendulkar. Reema, well, good morning. After a 6-day rally, we're taking a bit of a pause today, but there are a lot of stock-specific factors that we need to watch out for. Also the fact that today, of course, is the weekly BSE expiry as well.
Indeed, and the street investors will await the US CPI inflation print. But broadly, what you're seeing is IT taking a bit of a backseat, some profit booking after gaining almost 5.5% over the last two trading sessions. So the Nifty IT index is dragging its feet, down close to about 0.8%. And names like Infosys down 1.5%. In fact, that's the top Nifty loser ahead of its board meet to consider a buyback. Wipro, Tech Mahindra, these two stocks too are lower by close to about 1%. But other than that, things are on the quieter side. But there's lots of news surrounding individual stocks. Let's talk about Tega Industries because they have announced a big acquisitions. We've been talking about it since morning, but let's revisit it in case you missed it. Vamakshi is now joining in with the details. What's the size of Tega Industry? Who are they buying? How much are they spending? And how are they planning to fund it, Vama?
Well, absolutely, Reema. Tega Industries just announced its boldest move yet. Now, teaming up with Apollo Funds, Tega will acquire 100% of Molycorp for an enterprise value of 1.48 billion US dollars. That's over 13,000 crore rupees. Now, keep in mind, Tega's own market cap as of close yesterday was around 13,800 crore rupees. This buy is as big as Tega itself. But how will Tega fund this? Here's the breakdown. Tega will take 77% stake. Apollo Funds will take 23% stake in the SPV. Tega will put in 361 million US dollars, which is roughly around 3,180 crore rupees, funded by a mix of corporate debt of almost 995 crore rupees and a fresh equity raise of around 2,184 crore rupees. In fact, Tega has scheduled a board meeting on September 13th to finalize the fundraising plans. Now, Apollo will put in the balance 950 odd crore rupees, and there's also a contingent payout of around 120 million US dollars or 1,057 crores. Now, this will be paid over the next 45 months if the performance targets are met. But apart from that, how do the financials stack up? So why Molycorp? Well, it makes the grinding media like steel balls, etc., used to extract minerals, especially gold and copper, while Tega makes the liners and wear parts that protect those mills and optimize efficiency. Now, together, they can offer customers a complete mill solution, which translates into great cross-selling opportunities. Beyond just product matchups, there's also strength in the footprint. Now, Tega has 10 manufacturing facilities and a strong presence in Europe, Middle East, LATAM, CIS, as well as Africa, while Molycorp has 13 manufacturing facilities, 3 JVs, plus a potential JV with footprint in US, Canada, Australia and LATAM, and combined they will have 26 manufacturing sites worldwide. Now, that's not all. Let's also take a look at how the numbers stack up. Molycorp's revenues are about 8 times that of Tega's, but margins are much lower. So the combined revenues will stand at approximately 15,200 crore rupees with a blended EBITDA margin of 12.5%. Now, the good part is that Tega is buying Molycorp at a much lower EV to EBITDA multiple, about 9 times versus its own multiple of 41 times. Now, if the integration works, this could be earnings accretive.
Got that. All right, that's important. So, as you said, right, I think what stands out is that they're making an acquisition which is as large as them, right? So, how does this Molycorp acquisition fit into the company's strategic rationale? We chatted with the management, plus you would have spoken to a lot of analysts and investors. Take us through the rationale behind it, and now as a combined entity, what would the financials look like?
Well, absolutely, Reema. I just touched upon that. But, this acquisition actually comes with very big risks as well. Now, Tega is acquiring an entity which is larger than itself, which is spread across multiple continents. Aligning its operations won't be simple, therefore. Now, the other major concern is Molycorp's debt, which is at $1 billion. But the management is quite optimistic about bringing it down to $800 million. Now, the other concern is around growth. Molycorp's historical growth has been a modest 3 to 3.5% 3.5%, and the management expects it to stay around that 3.5 to 4% range, which is much lower than Tega's own 15%. Now, additionally, Molycorp's margins are lower versus Tega, but they target an improvement to around 13 to 14% levels in the next 2 to 3 years combined. Now, in the next the combined entity could actually have blended margins of around 18% in 3 to 4 years. So overall, Rima, to sum it up, this deal is a big, bold step for Tega. Investors will be watching closely to see if Tega can pull off because this move could either be a game-changing leap forward or a very expensive learning curve.
Oh, very expensive learning curve. Only time will tell if that is indeed the case. But for now, Tega Industries trading lower. Of course, mind you, the stock before this acquisition announcement had gone up by almost 14% in the last 1 month. So seeing some bit of profit booking there is Tega Industries after the news has played out. But we also spoke to the management exclusively earlier this morning, listening to what they had to say.
Debt at the target level is roughly about $1 billion. And the attempt is to bring the leverage down after the transaction closes. Sure, I think through the consortium arrangement that we have with Apollo, the intent is to structure the debt in a fashion that we leverage it down to around 800 million odd levels from the current billion, and that should help us deliver some improved benefits in terms of interest cost reduction with the leverage coming off, and hopefully even an improvement in the credit rating. We should be able to, the attempt is still early days, but the attempt is to at least shave off anywhere between 25 to 40 basis points of their current terms with their current lenders. I think where Molycorp today operates at is at roughly around 11% EBITDA levels. Our aim would be to try and improve that over the next 2 to 3 years to, on an average, anywhere between 13 to 14% levels. Tega, as you know, operates at a CAGR of 15%, delivers about close to 22% EBITDA. So the margin profiles are different, but we hope that on a consol basis over a 3 to 4 year period, we would be roughly at about 18% on a consol basis. In our model, we've taken like a revenue growth at a very conservative level for the target. We've maintained it at about 3.5 to 4%. They're currently doing about that much. So without putting in too much of high growth pressure on the target upfront, we've kind of modeled it on a conservative basis to be around 3.5 to 4%. With Tega consistently delivering at about 15%, we're looking at leverage to come off by year 4 to about closer to 2 times of EBITDA, to 2x, 2.5x EBITDA over 5 years. And we should be at an EBITDA level of close to about anywhere between 17 to 18% from third year onwards on a combined basis.
Tega Industries, the big story of the morning, 2.5% lower on the stock, had briefly moved into the green as well, but that recovery has been swiftly sold into. By the way, there is no movement on the index whatsoever, still hovering around that mark of 25,000, trading in a very narrow range, but can't take away from the fact that there are plenty of movers in the broader markets, which we will talk about as the show goes by. But some of the others in the list include the likes of Dilip Buildcon, that's up 6%. Chennai Petro is up 5.5%. Swelect Energy Systems, that stock has gone up almost 14% as we speak. So Chennai Petro is at the highest point of the day. Swelect Energy Systems too is up almost 13% as we speak. But the one that has come off significantly from the highs is Oracle Financial, OFSS. It opened higher in the pre-market trading, was up almost 6-7%, and since then has come off almost 9% from those opening highs and has now moved into the red. At the lowest point of the day is Oracle Financial as of now. What is also not doing well is Car Trade Technologies. For the second day running, the stock is down 6%, and after the decline that the stock witnessed yesterday post that downgrade that came in from JM Financial, it is the second day of losses for Car Trade Technologies, almost 6% lower on that stock as well. Take a short break. On the other side, we put the spotlight on the crypto markets with Manisha Gupta.
CNBC-TV18 presents Crypto Corner, powered by Coin DCX.
Crypto Corner, we are joined by Ishan Loya, who's a co-founder at TradingSutra.in. Ishan, hi, thank you so much for joining in. And crypto really seems to be buzzing at this point in time. 2025 has been a great year. For a new beginner in the Indian markets, what is it that you would advise? Is SIP better? Do the technical charts work? And is crypto for a long-term investment?
Correct. So first of all, thank you so much, Manisha ji, for this opportunity, and very good morning to all your viewers. So firstly, when we talk about the early investors, so majority of the people have this query that how we should invest, first of all. Secondly, which coins to invest. So because I have met a lot of people, like thousands of people I have met. So this is the major query. So first thing, let me answer you. For a platform wise, so earlier, maybe last 5 years, 10 years back, there are not a lot of genuine platforms which were available. Currently, there are tons of genuine platforms, let's say CoinDCX and everything, where you could easily start your journey with just 100 rupees. Secondly, which coins to invest. So this is a major thing. People go on towards the meme coins and the more risky coins, like we do in trading, right? So what do we, most of the people will be able to relate with me. Let's say a stock market thing. What you would initially try to do in the Nifty Bs or maybe in the Nifty 50 stocks. Here you could use a website which is known as coingecko.com. COINGECKO. So where you could filter out from the basis of market cap. So you could definitely invest that in the top 5, top 10 thing so that your money is safe, because here markets are highly volatile. So as a beginner, I would suggest you should utilize these methods and go on towards a higher market cap things.
Ishan, a question that usually is asked around is that since crypto is so volatile, do the technical charts work at all?
Definitely, technical charts work. So currently we are into this 2025 bull run, right? So 24 halving has already been done. So in 2025, you will be able to see trend following strategies. So what we do in this technical wala part. So trend following strategy is something, let's say, when the newer high is going on. So BTC currently was around $1 lakh. Initially, it made a high of $1,25,000. So this is how, whenever a new high is made, you could definitely utilize it because there are higher chances of going upwards. Secondly, you could utilize an indicator, let's say a simple and popular indicator, which is a super trend, which works definitely good. And I can assure you, ma'am, money is made over here. I have tried it and I have made it, and definitely your viewers also can.
All
So
right.
crypto
Ishan,
market is a relatively easier market than any other market.
well, that's good to know, Ishan. Also, would you say that crypto is more coming into mainstream, or are we still years away from that? Would you also say that tier 2, tier 3 cities are now getting a hang of it?
Definitely, tier 2, tier 3 cities are definitely getting a hang of it. Like, I'm based out of Nagpur, and definitely I've seen tons of people talking about cryptos, having something in their wallets also. So you can talk about, let's say, Jaipur, let's say Kanpur, and a lot of Hyderabad, where you could see people and a lot of startups, not just that, maybe Web3 startups, and everything will be there. So next unicorn startups will be from this space, crypto space, and that will be from the tier 2, tier 3 cities only.
How are you also looking at the overall understanding? As you said, people are trying to now get an awareness about and are being educated about crypto as well. But crypto has moved on, right? Because we have futures and options and yield farming and lending and leasing and so much more happening here.
Correct. So crypto as a whole is a very huge thing. So you could start bit by bit over here, right? So let's say we have talked about yield farming. So everything is related to different parts. So firstly, you have to capture, okay, you have to go on to stage 1, stage 2, stage 3. First, you are utilizing the concept of staking. You could also get yield returns, what you are trying to say. Like initially, like in the DeFi zone, decentralized finance, what you could utilize, like currently we just put our money into banks and bank is providing us the FD rates. What you could do over here, you could, let's say, buy Solana or buy Ethereum, and you could stake it and you could get returns on that. So this is a very upcoming sector where you could see people are utilizing the DeFi zone, which is like peer-to-peer part, decentralized finance.
Ishan, the other thing is the high volatility that crypto gives. And I know you mentioned earlier that it works well for the traders as well. But for somebody who wants to stay invested, this volatility sometimes can be unnerving. Is there enough risk management in place for this?
So definitely risk management is the only grail. So whatever you do, you have to manage your risk, right? So only holy grail is your risk management. Whatever you are doing, whether you are trading, whether you're investing, you have to keep in mind. So maximum what I could do, you could have maybe like 5 to 10% of your portfolio. Maximum of that you could invest in your cryptos, so that, because crypto is a very volatile asset, right? Crypto is something which could be like 10% up in a day and 10-20% down in a day also. So for managing your risk, that should be one of the more priority. Secondly, even if you're trading with a 99% probability rate, still if you're not following the risk management, your strategy won't work, because one wrong trade can wipe out your capital. So make sure to utilize it, and definitely crypto risk management is the major part.
Yes. Ishan, one final question. And as we move ahead from here, while 2025 has been a great year, and as you mentioned, that comes in on the back of Bitcoin halving in 2024, how would you look forward to 2026 now?
So 2026, so as I said, these are phases in the market. So first phase is where the people were accumulating in 2022-23, where the big buyers were accumulating. Second phase was the awareness phase, where currently also people are gaining the confidence, okay, BTC is something which definitely helped them to create generational wealth. Third part would be the mania phase, which is gonna start from maybe October to November, where you will see the coins will rise 10x, 100x also. And last part, maybe by mid 2026, it will definitely reach a peak and it will start to fall over here. So this is how the 4 market cycle works. So currently, I am very bullish on the crypto market. So for the next 6 months, 8 months, definitely it is one of the best time to stay invested in the crypto market.
All right, Ishan, thank you so much for joining in, and thank you for that very wonderful conversation. Really appreciate your time here at CNBC TV18.
Thank you so much.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Welcome back. Things are quiet, at least on the Nifty and the Sensex, but the Midcap index is outperforming yet again. It's got a gain of about 175 points. What's fueling this up move? The individual movers and shakers with Hormus was at the big wall. Hormus.
Some at least 7 to 8 names on the small cap index are trading with gains in double digits. Some of them even going up to 15-17% in the first couple of hours of the trading session. You start off with Ikeo Lighting Technologies, and we mentioned this stock a few weeks earlier as well, when towards the end of August, when the stock was up 20%. Today it's up 15, has gained in 3 out of the 4 trading sessions this week. This is the biggest single day gain that the stock has seen in a month, and almost 22 lakh shares have already changed hands. The 20-day average is just 3 lakh shares already. So despite this move, the stock still remains below its IPO price of 285. Indoco Remedies is the other one, and this is the biggest single day gain that the stock has seen since March, 14% higher here as well. And the stock has done well in the recent past, has gained in 7 out of the last 9 trading sessions. And today we have had 23 lakh shares change hands compared to a 20-day average of just 23,000. That's just 123 lakh, not 2 of them. Whether it's broken above its 50 and its 200-day moving average as a result of this move, but has been an underperformer this year and has been an underperformer over a prolonged period of time. 4 years of negative returns now, including this one, at least for now, for Indoco Remedies. The other one is SMS Pharma, was up yesterday, up today as well. 5th day of gains that the stock has seen today. Is the biggest single day gain that it has seen since April, 13% higher on that stock, as a result of which the stock has now gained almost 27% in the last 5 trading sessions. Today's volumes, well, 11 lakh shares compared to a 20-day average of just 1 lakh shares. And today's volumes, these 11 lakh shares, which means it has almost crossed yesterday's trading volume, which was around 12.5 lakh shares. And courtesy of this 5-day up move, the stock has turned positive for 2025 after having doubled in 2024. And the last one on the list, Car Trade Technologies, was down yesterday, down today as well, or 15% fall now in the last 2 trading sessions. 6 lakh shares have already changed hands, a 20-day average of 2 lakh shares. But the bigger takeaway is the fact that it is still managing to hold on to yesterday's low, which was 2222, and even today's low is around 2280. So it is managing to hold out yesterday's levels, and analysts also mentioned that the trend is so far stable as long as it manages to hold on to that level of 2222. Rima.
Gadha, thank you very much for that. Just a quick recap then of the big, of all the news surrounding the tech stocks today. Well, the index is under pressure because it's had 2 good days on the trot where the index rallied about 5.5%. But today, there are 3 bits of news that we'd like to update you on. First, Infosys board meet today where they will consider a buyback. The street expects a buyback in the size of 10 to 14,000 crore rupees. It will be a tender buyback and it typically happens at a premium. Some say about 18%, 20, 25%, but part of the up move has already played out. So that's on Infosys. The second one is on TCS, and this is after CLSA met the management of TCS at an investor forum in Hong Kong. So first, when asked about demand is unchanged compared to what it was in Q1. But the management sounded incrementally more bullish on AI. So they're saying that because of the AI opportunity, the overall IT tech budgets will expand and therefore it will be a net revenue positive for a company like TCS. And thirdly, now they believe, CLSA says that there will be pressure on TCS because Infosys come out with a guidance. TCS is eligible to come out with a guidance. They have so much cash. So now CLSA says that we think that TCS could feel the pressure and come out with a buyback, and their estimate is for 20,000 crore rupees in terms of a buyback. TCS has already done 5 buybacks. This would be the 6th one. And typically, because TCS has done tender buybacks, the last 5, the stock has been supported. So they've done the analysis of how the stock fared during all the buybacks. So on the day of the announcement, the stock pops. And even during the entire buyback period, every single time the stock has risen, either 1% or up to 3.5%, 4%. That's the second one. And the third one is Oracle. Though the company has clarified, and we've been saying that there is no direct impact of Oracle's parent company's performance on OFSS. It's just that the products are the same. Only OFSS caters to the financial sector. But Oracle made big moves. It followed through. The after-hours trade was suggesting 28% rise. It ended with a gain of about 35%. And now it's closing in on the $1 trillion market capitalization. And not just that, it's resulted in a shifting of global wealth, personal wealth. Larry Ellison, founder of the company, is now the richest man.
Imagine making almost $90 billion in a single day.
101 billion.
At the day's high was 101 billion. But yeah, indeed. Imagine making 101 billion in a day. That is something at a different level, right? He briefly overtook Elon Musk as the world.
He also has a lot of stake, now 41% holding.
Indeed, yes. So that's, of course, playing its part as well for Oracle. And, of course, nearing, at the day's high, briefly nearing that $1 trillion market cap as well, as Rima was highlighting. Very positive results, positive commentary as well from the management, and that quite rightly so has reflected on the stock price. Not that the stock had not moved year to date before, it was already up 45% before the results were announced. So this has added to those moves for Oracle, and of course briefly surpassing Elon Musk there, and he lifted. And now the difference between Elon Musk and Larry Ellison is now only $1 billion. So Elon Musk is at 384.
Actually, what I was reading is that Forbes is saying that Elon Musk is still the richest, while I think Bloomberg put out that Larry Ellison has overtaken it. And the difference between the two is how much you value his private investment in SpaceX. So that explains the differential. But neck to neck, right?
Neck to neck, yes.
Yeah, when you're talking about...
At this pace, well, if things go the way they are, it might just happen today itself. With the way Oracle's moving, who knows? But yes, Larry Ellison, Oracle, the talk of the town over the last couple of sessions. And of course, there are a lot of brokerage commentary that came in earlier in the day. One was, of course, on Eternal. And of course, JP Morgan coming out with a positive commentary on that. It's maintained its overweight recommendation and it's increased its price target to 390 rupees. So that implies 20% upside from yesterday's closing levels. They focus primarily on Blinkit, and they are mentioning the fact that their channel checks have suggested that it is continuing to expand its leadership over the peers in multiple ways is Blinkit, and as a result of which they can sustain this higher growth momentum that these quick commerce players have embarked upon without any delay in turning either break even or profitable going forward as well. Of course, both companies, both Swiggy and Eternal, have laid out timelines as to when they turn profitable on a PAT basis. Well, Eternal, of course, is already profitable that way. And they also mentioned that this, as a result of all of these positive things, they are going to prioritize growth over profit maximization, and their quick commerce estimates for JP Morgan for Eternal, their gross order value estimates for FY 26, 27 and 28 have now increased by 6, 22 and 35% over the next 3 years. So positive commentary coming in for Eternal. The stock opened higher, still holding on to gains of around 1.5%.
Okay, let's move on then. NTPC is also in focus. And again, here it's a brokerage note. HSBC. Vivek is here to tell us more what's driving NTPC higher by 1.5% now.
Well, that's right. Remember, NTPC has been a significant underperformer in this particular year. In fact, the entire past pace, mainly on the back of the fact that you saw extended monsoon, and that actually led to a significant demand downtick as far as the entire power sector as well as the short-term power market was concerned. However, HSBC today has come out with a very interesting note. First thing is, post the underperformance of the share price, they've gone ahead and upgraded the stock to a buy from a hold rating. They've raised the targets to 400 from 385. They are saying that the company is at the forefront of power management as well as generation. They are saying that the latest arsenal in the company's repository is the battery as well as the nuclear opportunity. They do take cognizance of the fact that there was slowness in power demand and also delays in execution as far as capacity addition was concerned that led to the underperformance. However, they feel that both of these issues will now start getting addressed, and on the back of that, the stock price should reverse. They're saying power demand will benefit from a low base of FY25, which actually benefited from a higher base of FY24. And thermal execution delays, which the company was facing, is now getting sorted. 2 thermal power plants of 1.3 gigawatt have now been commissioned. More importantly, a significant part of the capex of 4 trillion out of the total planned 7 trillion actually comes under the regulated tariff mechanism, indicating that there is stable earnings visibility as far as NTPC is concerned. Along with that, it's going to be at the forefront of the nuclear energy propositions that are being carried out. So a lot of positive figures in place. Post the price correction, they find the stock quite attractive.
Find the stock quite attractive, 1.5% higher for NTPC. Vivek, thank you for that. Still very quiet on the index, still 4 points higher, almost at the flat line. It continues to remain where it started off the session with. It's been a 50-point range all through the day today. So it's interesting to see what the FNO trends are indicating, particularly so in a 50-point range on a weekly expiry day. Sudarshan is here with the FNO trends from our FNO desk. Yes, Sudarshan, 50-point range on expiry day. Well, is the second half expecting a surprise on either side? What is the FNO data indicating?
As you say, it's a quiet day. Don't you think it's been there for the last 6 trading days, even if market has been closing higher? And it looks like that even today on the expiry day also will manage to close higher. And it would be the longest gaining streak in the several months that we'll see if Nifty manages to hold above or around 25,000. But the problem that Nifty is facing, again, once intraday it crosses the level above 25,000, but it fails to hold. If yesterday IT was supporting it, today IT is one of the biggest drag on index. And even there is not much support from financials. Nifty Bank again trading around flat line. Now there is not much indication from volatility index also. It just remains around below 11, but it's flat. So how are things looking at the options front? It's the same thing that we are seeing in the cash market. If you take a look in both cash and put options, similar things you will see. So 25,000 call. Premium OI buildup is being seen, but premium has fallen. 24,900 put, same thing. OI buildup is being seen, but premium has fallen. And it's the same for 24,900 put, where premium has fallen to 51 from previous close of 63. So support for Nifty, immediate support remains around 24,900. But if we fail to hold that, next support comes around 24,830. And resistance remains around recent high that we had seen of 25,150. What about Nifty Bank? Currently it's trading around 20-day moving average of 54,680. So support will remain intraday low of that is 54,400, and resistance or say major buying can be seen in Nifty Bank only if it crosses the level above 55,000. So resistance I have taken off 55,762. That is 50-day moving average. Two stocks that I have taken. You have been talking about Oracle Financial. Do you know today open interest in OFSs is up more than 31%. So there in all likelihood stock may go in FNO band. Apart from that, Piramal Pharma is seeing fresh long. So keep an eye on both these names.
Going to FNO ban Oracle Financial. Sudarshan, thank you for that update there. Interesting from the FNO desk on a relatively quiet first half. of the weekly expiry, but what does the second half have in store on the charts as well? Let's get Jay Thakkar from ICICI Securities to answer just that. Jay, good morning. Thank you for joining in. That 25,000 continues to be a brick wall for the index as of now, but do you believe that there is enough strength to go past that wall in the second half of the trading session? Your call here and on your specific stock recommendations as well.
Good morning to you, Humas and Rima. Well, see, that's a very tricky question. I would say, Humas, on the weekly expiry day. Now, what happened of Sensex, obviously, but then on this weekly expiry day of Nifty, we saw that Nifty traded within a range of say 50 points. It was in the range broadly, did not break 24,800. As well as 24,900 on the upside, and we saw approximately 24,868.50 kind of an expiry, and for that Sensex would be 81,500 today. If it is likely to if the expiry of the Sensex is likely to be that of Nifty. However, one thing Hormaz one should be looking at is that at 25,000 there is good put additions as well. Although Nifty is trading below those levels on spot, the futures is above those levels, and we are seeing if 25,000 levels are held on futures, I think the probability of Nifty inching towards 25,200 is quite high, because slowly, gradually, what we have seen is that the FII's sell figure in the cash market has reduced, at least in past couple of trading sessions, 6 to 7 trading sessions. The net long percentage has now moved beyond 10%, so that is also positive. The VIX, obviously, it's at the lower levels, which was expected to move higher, didn't go up, is stable. So, at least it can help to bounce back. It can help Nifty to bounce back. Slowly, gradually, as I said, Hormaz sectoral performance is seen wherever we had shorts. So probably, maybe Nifty Defense, Nifty Energy today, Nifty PSU Bank Index, Nifty IT, which you have seen. So the only one which is left now is the banking and financial. Maybe financial is also one thing which we have seen perform quite well. So Nifty private sector banks particularly is down by almost like 8 to 10%, and that's been underperforming for Mars. And if that comeback, makes a comeback, even for that matter, and till 55,000 levels, I think it will help Nifty to push beyond 25,000 and inch towards 25,200 levels. So I think that if not today, but for this weekly expiry for Nifty, eventually 25,000 levels will be taken off, is what I think, and it will inch towards 25,200. Now, since we have this view, and from the short covering point of view, I have a couple of buy recommendations. A few of them are from the defense name. One is on BDL futures. I think it's looking good at these levels. It can inch towards 1650 levels in the short term, based on short covering, and even for that matter, Mazgaon Dock. As a disclaimer, we had recommended Mazgaon Dock, and we have advised to book profits out there as well. But then still, it's looking good at least until the levels of 3,000 on the upside. So these two stocks from the defense names are looking positive, and from the Nifty Energy pack, I think Siemens is looking positive at the current market price. It's been consolidating since a couple of trading sessions now, but it's likely to provide a breakout Hormaz on the upside. So Siemens on the upside can inch towards the levels of 3,400. On the lower side, 3,100 is a good support. So there's a better risk over there.
Jay, thank you for sparing time and joining us with your views on the index and on specific stocks as well. Flashes on your screen, some more exclusive information coming in that market regulator SEBI is looking to float a consultation paper to consider ending the weekly F&O contracts, and the consultation paper on ending the weekly expiry is likely to come out within a month, and we'll get more details on this, but it is planning to transition to a monthly expiry with a defined glide path, and they may consider the same day expiry across all exchanges. There's a lot of back and forth over Tuesday and Thursday, eventually with NSE now moving to a Tuesday expiry, BSE moving to Thursday. The SEBI board is likely to have been briefed on a longer derivative tenure, is likely to be briefed at the board meeting that is supposed to take place tomorrow, and the consultation with the exchanges is likely to begin from next week. So important exclusive information, and the consultation paper may also propose some curbs to reduce the retail participation in the F&O segment. So even more information there, and thresholds could be proposed to limit the retail entry into the derivatives market. Showing up on the stock reaction on BSE now at the lowest point of the day, 3.5% lower on the stock. And so we'll get you more details for this as the day goes by. But for now, the important information is that a consultation paper to curb weekly expiries and take a glide path towards monthly expiries will also be proposed in the consultation paper. The SEBI chairman had also made this remark on the 21st of August as well. BSE for now 3% lower on the stock. Take a short break. On the other side, continuing our conversation with the markets with Deepika Mundra from M&G Investments. Stay tuned, we'll be right back.
Welcome back. Let's address the big story that you can see on your screen, where SEBI is planning to float a consultation paper to bring an end to weekly expiry and perhaps introduce longer tenured contracts. This will be a big blow for BSE, CDSL, all these capital market plays, which have been thriving on rising retail volumes, could now feel the pressure. Yash has picked this up from his sources and joins in with the details and the thinking behind this. Yash.
Well, Reema, so it was on August 21st when the SEBI chairperson Tuhin Kanta Pandey had expressed the intention to have longer tenure derivatives. A continuation of that intention of SEBI, what we've been given to understand from our sources, is that market regulator is likely to float a consultation paper to end weekly derivatives expiry, and that consultation paper could come out as soon as in the next 1 month. What we've been given to understand is that SEBI plans to have a transition ultimately towards having monthly expiry, but with a defined glide path when it comes to that intention of having a monthly expiry. Also, what we've been given to understand is that one thought which SEBI would also consider is to have a same-day expiry for all exchanges. So any point on that glide path, as well as the end destination of having monthly expiry, the thought could be to have a same-day expiry across exchanges, that is for NSE, BSE and any other small exchange who wishes to have an expiry on that day. Also, tomorrow, that is September 12th, the SEBI board would be meeting, and importantly, though it's not a part of the agenda, what we've been given to understand is that the board would be briefed and informed on, moving towards this decision or action of ending weekly expiry and moving towards monthly, with, of course, as I said, a glide path towards it. Another important aspect is that SEBI could also consider various options, and this could be a part of the consultation paper, to restrict retail participation when it comes to the derivatives market. There are various, ideas, thoughts and suggestions which market regulator has at this point of time, as I've been given to understand, and all those would be considered. But essentially, it's a thought which surrounds around the central point of having some kind of threshold when it comes to allowing or not allowing retail participants to sort of participate in the equity derivatives market. There are various suggestions also which SEBI is considering when it comes to increasing the depth of, the cash market volume. So that's another important aspect which market regulator SEBI is considering. But importantly, the move will start soon towards ending weekly expiry. Consultation paper likely within the next 1 month. Exchanges, importantly, will start getting consulted and being roped in the discussions starting next week itself. So important, move coming from market regulator towards that intention of having longer term equity derivatives.
Indeed, important developments, and Yash has been on top of these developments right from the start, with the SEBI chairperson making that intent to that on last month on the 21st of August, as he was mentioning. BSE now down around 3.5% at the lowest point of the day. take that point forward with Deepika Mundra from MNG Investments, who's joining in now. Deepika, good morning. Thank you for joining in. What do you make of this? You heard Yash about this phasing out of the weekly expiries. What does that do now to a lot of these capital market names, say the likes of BSE and a lot of these discount broking firms as well, who have relied a lot on retail participation for their volume growth and so on and so forth?
Hi, Hormuz. Thanks for having me and good morning to everyone. So firstly, market structure changes, right? And the capital market plays in particular have been trading at fairly premium valuations over the last 12 to 24 months. And when market structure changes, some of these valuations get challenged. So I think that the capital market plays in India are structural. We have seen financialization of savings, which is likely to continue, but changes in regulation as such is going to bring in volatility. So definitely not the best time to always get into these stocks at peak valuation. Probably wait for the right opportunity here.
So you all don't have it as a part of your portfolio, any of these capital market plays, Deepika?
No. So in the financial space, we are overweight the private banks. We are selectively overweight life insurance, but currently not exposed to the capital market space.
Talk to us about defense, right? It made a lot of sense a couple of years back. It generated a lot of wealth. There was so much spending by the government. But now the narrative seems to be that this public spending will shift towards consumption. CapEx spend will shift towards consumption. And that will maybe put a lid on the kind of astronomical growth we've seen in defense stocks. With this concern, how should one approach defense stocks? Because it is one of your preferred plays.
That's right. So I'll address both the points, actually, both in consumption as well as on defense. What we have seen in defense after a long time is that there has been an order book build-up and stocks first react to order book. But we've also seen that the execution has been fairly good across the board. So I think that's something that we like. It's been reflected in the earnings. And given the geopolitical situation around the world, we see continued impact on defense stocks, which is likely to be positive, right? India potentially being an exporter to the world in the defense categories. So all those things put together make us positive. We don't think that these stocks are going back to their old valuations anytime soon of sub 15 times PE. We think this is a structural opportunity. On consumption, while yes, the government has of course tried to stimulate it, it's just that not everything will benefit. So there we remain actually quite selective in the consumption space, favoring more premiumization rather than staples.
Deepika, the other preferred play that you have is you're trying to play the premiumization theme here, be it travel or auto. Telecom is one of your preferred plays, but of course, you would prefer play this theme only via the market leader or through a proxy like Reliance Industries, because one of the other players, of course, is struggling as a going concern. What about the telecom space excites you here? Is this the prospects of more tariff hikes coming in or the increased adoption of 5G? What's your case here?
So here, for instance, well, the tariff hikes are already well known. Some of them have already taken place. What we like about telecom as a space is while the capex intensity is coming to somewhat of a pause, we're going to see significant potential for free cash flow generation. And these are the companies that have the ability to participate in data centers and some of the newer growth areas in the economy as well. But yes, we like all the other things too, which you mentioned earlier, travel in particular, and even within healthcare, we like healthcare services because that also offers an opportunity for premiumization and spending.
Telecom, what is the base case? The 3+1 structure continues. Will we continue to have 3 private players? Because that also influences an investment in a company like Industars, for instance. And what are your thoughts on Jio IPOs? Because that's coming 1 year down the line.
Yeah, Rima wouldn't be able to comment on individual stocks, unfortunately. But the industry structure in telecom, like we have in airlines, is quite favorable. Having 2 or 3 majority players ends up ensuring some sort of industry discipline, unlike what we had seen in the past. So we think that's a structural positive for the sector.
How are you playing the travel theme, Deepika? You're playing it through hotels, you're playing it through the tourism names. or a proxy, say the luggage manufacturing companies. They are not someone that they have done significantly well over the last year and a half or so. Most of them have been struggling. How do you play this theme? Hotels, proxies or luggage?
I think the good part about the Indian market now is that it gives you so many optionalities, right? There are a whole string of stocks which didn't exist 5 to 7 years ago, which now are there in the travel space. What we like in hotels is the demand-supply discipline. So we think that the supply for new properties, particularly on the luxury side, is likely to be more limited for the next 3 to 4 years as versus the demand. Airlines, again, like we discussed already, the industry structure is fairly disciplined. And then again, there are also the platforms. So, and platforms across multiple sectors offer you an opportunity to do things which are, subsector agnostic or brand agnostic. So the travel platforms also is another way to play the space.
Great conversation, Deepika. Look forward to more such. Thank you very much for joining in. The Nifty and the Sensex, which were just flitting between the red and the green line, have dipped into the red, and a couple of these metal names are weakening. Hindalco, JSW Steel, Tata Steel have seen their gains erode, and the stocks have moved into the red now. There you have it. The Nifty Metal Index has glided lower. Get into a break. We'll come back. And on the other side is our special segment, Under the Lens, with Sonal.
Welcome back onto our special segment, Under the Lens. Salasa Techno Engineering is the stock under the lens today, with Sonal putting that under the spotlight. Sonal.
Thank you so much for that. Yes, Salasa Techno Engineering, the stock is under the lens. The stock surged nearly 23% in the past 5 trading days, though it remains down about 51% over the last year. Company is a steel structure and EPC player that also builds telecom infrastructure, and clients include the likes of Airtel, Jio, Indus Towers, KC, Welspun Energy, Tata Projects and BHEL, to name a few. The company, remember, listed in 2017. It was a heavily subscribed IPO with subscription ranging or reaching that 250 times level. Now, do remember, some corporate actions here underwent a 10:1 split in 2022 and 4:1 bonus in 2024. On the numbers now. Revenue has climbed from 596 crores in FY22 to 1447 crore rupees in FY25, and in Q1 we've seen numbers around 300 crore rupees. If we talk about EBITDA, it has been more mixed after peaking in FY24 at 126 crores, fell to 111 crores in FY25, and in the quarter gone by, it sits at around 30 crore rupees. Profit after tax also swung. FY24 PAT was 53 crore, but FY25 saw a fall, and Q1 PAT is roughly 8.8 crore rupees. Management points to the consolidation of EMC Limited, a loss-making acquisition, as a key reason for the FY25 dip in PAT. Cash flow and capital efficiency show some strain. Operating cash generation dropped to 19 crore rupees in FY25 from around 47 crore rupees earlier. Working capital days stretched to 81 from 60, and ROCE eased to 11% from 16%. The company reported no dividend in FY24 and FY25. This is after paying modest dividends in the years earlier. Strategically, Salasa has been investing a 60 crore capex program focused on plant and fabrication capacity, commissioning a 96,000 tons per annum galvanization plant, and the acquisition of EMC Limited for about 178 crore rupees. This is to bolster high voltage transmission capabilities, basically looking at the power sector. Management sees growth runway across 5G, telecom rollout, there's power transmission and railway electrification as well, renewables and heavy steel structures. Also, while researching, I went through some interesting filings, which suggested social media chatter in 2024 alleging paid promotions by influencers, where the company had denied any involvement. Additionally, promoter holding has slipped to about 48.9% in June 2025, which compares with 53.4% in December 2024. So it has been continuously reducing, as you can see on your screen. On valuations, the stock trades at roughly 90 times FY25 EPS and demanding a multiple that investors will want to reconcile with growth visibility and also margin recovery going forward.
Interesting. Sonal, thank you for that on Salasa Techno Engineering. With that, we call time on this edition of Trading Hour from Rima and me. Thank you for watching. Halftime report on the other side.